Welcome back. You're with us on Corporate Radar. Let's continue with more corporate conversations. And Happiest Minds is the next company that we're speaking with. The company reported a strong set of numbers for the first quarter. There was healthy revenue growth coming through along with margin expansion. Reema caught up with the company's MD, Venkatraman Narayanan, and co-chairman and CEO Joseph Anantharaju. And she began by asking them about the quarter and how they see growth shaping up in the future.
We had stated late last year when we gave our Q4 results that we would be looking to doing double-digit growth in constant currency. The first quarter of this year, we've done 2.3. If you keep this trend and build on the strengths, we should be there for the year. The good thing is, the trend up in our margin profile. We have got back to the 17.8, 18% operating margin kind of a number from the slight dip that we saw in the last quarter. So if you look at year-over-year growth or a quarter-over-quarter growth, whether it is EBITDA or operating margin, there has been significant growth to underpin that statement that we made. So guidance, I would say, we're not holding it out as a guidance, but the estimate for us is double-digit growth and margins in the range of 20 to 22%. But one point I would like to highlight in the call is that our generative AI business, which I have been consistently referring to, has been taking in investments for the last 4-5 quarters, has broken even operationally. So we have just made about 24 lakhs of operating margin on. If you can look at our segmental results, that comes out clearly. But that break even is a significant uptick from the investment phase that we were in the last 4 or 5 quarters. We continue to be investing in that business because it has to come to a profitability level of equivalent or higher than PDAs and IMSs. So we have a slightly a road to that or a plan to reaching that, upping our efficiency in terms of utilization, picking up from 40 last year to about 55, should go up all the way to 75 doing billable projects. And that's the way forward for us to turn that, investment into a payback kind of a situation. New sales into which we had made investments is also starting to pay fruit. And that's also seen in the financials. So yes, efficiencies that we are seeing in the business, improvement and turnaround is what should hopefully pay for, the pay increases and foreign currency volatility and further investment that we hope to make in Artha banking and other platforms that are in the works for us.
So just to complete the point on generative AI, and congratulations on it breaking even. So today, generative AI is 2.4% of your revenues, which compares with 2.1% prior quarter. When do you think you will be able to get, operational profits from generative AI at par with the company average? Can it happen as soon as, say, Q4, the end of this fiscal year, Q4 of FY26? What's the roadmap? And even in terms of revenue contribution from Gen AI, when can it hit double digit? I mean, what pace is it growing at?
Generative AI to the similar operating margins as the other business would happen in FY27 because we have just 3 quarters left. And I see the EBITDA increasing sequentially. So FY27 is when we're expecting it to get to the same levels. And then after that, hopefully be at a higher level. And, as far as the contribution of Gen AI is concerned, I think we need to look at it from the lens of direct revenues and pull-through revenues. Because for most of our Gen AI projects, there's a need to figure out the right source of data to get the data into one data lake or a customer data platform. And then there's integration involved, there's UX element involved. Typically the flow, the pull-through is around 1:2. We expect that in the next 3 years, generative AI should get to around $25 million in revenue from the $5 million that we expect this year. But the more interesting thing is the pull-through revenue and the ability to differentiate out in the market.
Joseph, that $1 billion target, $1 billion revenue target, which you had set by FY31, last time you said that, that's been delayed and you will provide a revised timeline. So now what is the new goalpost for the company or the milestones? When can we hit $1 billion?
Sure. So we've been constantly, looking at this number given all the movements in the market, because when we set this as part of our vision in 2021, 2022, the market dynamics were a little different. Having said that, if you look at our CAGR CAGR over the last 4 years, from 2021, it's been at 28.5%. To get to $1 billion by FY31, we need to do 22%. So it is a feasible number. But we're keeping a very close look at the number, the inorganic growth, the organic growth. And, when we feel that we need to make a statement, we would get back. But as of now, I think we're holding on to that FY31 goalpost, but keeping a very close watch on our quarter-on-quarter, year-on-year growth and market conditions.
Venkat, the margin guidance of 20 to 22% by FY26, is that for EBIT or is that for EBITDA?
It's for EBITDA. And
so you're already there, because this quarter you did 21.6, I think.
21.4 for this quarter. Yeah. Okay. So that's what we want to maintain and improve on through the efficiencies that are there in the system. Yeah.
Quickly, what drove the margin improvement on a quarter-on-quarter basis?
One is the organic business growth, 2.3%. That's a healthy growth, in our business. That plus there was some benefit that we got from foreign currency, but not as much as what we thought we would. The third is, generative AI pulling in that break-even number. And also, there are a few of our existing projects which have grown nicely. If you look at our segmental results, you will see that existing business, there was a little bit of, relaxation on the holdback on the so-called discretionary expense. So that all of that helped us in, keeping the same cost structure, and we could get to the profitability. The most important thing is utilization is at a 5-quarter high at about 78.9%, if I'm right. So that's something that all the teams have been consistently working on. So that's also contributed to the margin gains that we saw.
Venkat, you want to add to wage hikes? How much, by when? And do you think, your company will need to either freeze hiring or perhaps even look at layoffs?
Just to put numbers in perspective, we had 150 people hired last quarter, and we have gone down on our headcount about 109. So you see, we had to hire. So it's almost kind of a reset of sorts, if you ask me. Like Joseph mentioned, the pyramid getting slightly shifted with the way markets are moving. So that's one side, and we have to also, handle the attrition of 18.2%. So it's actually counterintuitive. You have got companies talking about layoffs, and we are having an attrition of 18.2, which does speak about the kind of people that we have and the attention that they are getting from the markets in terms of opportunities. So we balance both of them. So I can make one statement: we're not looking at layoffs as such, but efficiency improvement levers. We are surely working on that. In keeping with all of this and the market trends, we will be looking at, compensation. Our annual increase is due this quarter, and we will be looking at it. And yes, obviously, that will have to be defrayed through revenue growth, some bit of luck on the foreign currency and the efficiency improvement that we talked about in utilization. So we have to do that, and we have to also keep the market trends. So we are looking at going ahead with our, increases this quarter. So we are working on that, and communication will be out to people very soon.
So wage hikes are intact?
Yes. No, I would say we are going ahead with the plan. The percentages are being worked out. If you look at the industry, nobody has made any commitments of any sorts. So in that kind of a background, there's quite a bit of assessment that's happening internally. What sort of increase that we have to do, and what are the segments that we have to look at. So all of that is in the works, Reema.
Needless to say, but hikes this year will be lower than last year, given the environment?
That would be a fair estimate.
Okay, that's an interesting chat. That's Happiest Minds, talking about, of course, some of the generative AI revenues, etc., some targets out there as well. Mitesh Thakkar is with us with what he'd want you to do as far as individual trades are concerned.